work and school and whatever it is you may be having that draws your attention or energy, sucks the
welcome
life
back,
out of you.
guys.
Want to charge you.
Welcome back, guys. Yes, if you watch my Friday yesterday, which is yesterday, probably yesterday market review, I said I was going to give us a weekly market update, and and I have decided to do that using Trading View, right? So, sorry, I've decided to do that using MT5 because my trading view is giving me, it's because I'm not a paid member, it's not really giving me the current price. Although it's still kind of effective, right? But I wanted to use this MT5 to do this particular video, right? This weekly recap video, so you can go and compare it with your trading view and see if you are using a paid. Congratulations to you, but you can still get quality information with this with this what is it called, with this MT5, right? So what you're looking at currently is the weekly the weekly chart for DXY, but we mostly start with euro when I'm doing this market review. So we talk about euro, then we compare it with the XY. So without wasting much of our time, let's dive into this. I'm going to be explaining the weekly, the daily, maybe touch on the 4 hour, but not that much. But I'm focusing on mainly the weekly and the daily, right? So the euro US dollar weekly contract for second week of February, which is the week that started from 11th and end on 17th of February 2024. So uh which is a second week for February, delivered an indecisive down close candle that tapped on the weekly premium bullish order block, which led the retracement higher in price and also sweep a premium old low. Meaning that what I'm trying to explain here is that if you see this particular line is representing an old low that has been swept, and we swept this old low, which lead us to this uh proportion block, bullish proportion block, right? Because this is an order block and this is a proportion block, so, or a mitigation block. So this is a weekly proportion block, just refer it as which weekly order block. We've tapped on it before and now we come back to reuse it, right? And we can see how price delivered, rapidly when we sweep it, and we rapidly delivered higher, which shows you know a change in, which is indicating a change in the direction of the market. Now on the weekly, we can see that there is a quiet little difference between the XY and euro, as the XY is on a clearly weekly bearish order block that has not been tapped or used before, and the euro, it is a liquidity sweep plus old low that has been tapped, a liquidity sweep plus an old tap weekly bullish order block, which we can now say will have a great influence in price. Now, because on an instance, we have already used this bullish order block, right? It is not supposed to be effective, right? Like that effective, because it has been tapped before and we tapped on it again. Also, we also take out liquidity here, which is this line here. We take out that liquidity and we tap on that weekly order block. So let's compare this with euro, with the XY. Now, what I was indicating is that on the XY, we can see a clean. Now, the XY is more clean. We see this is a bearish weekly order block, which I indicate with this red line is a bearish weekly order block, and we traded into it, and it has a fair value gap within this price. We traded into it, and also we swept buy side liquidity to tap on it, which is also a liquidity that has been engineered to deliver lower. Now, and price, as we tap on it, price rally back on and close, although it's closed a bullish candle, it closed as an up close candle, but the wick, the body of the candle is showing that there is a weakness in the dollar, right? And a you know s- a weakness in the dollar and a strong, will I say strongness or a bullishness in the euro. So if you compare these two markets, we can see that the DXY has a clear indication on price. And also, now, if this move, we don't know if this move is going to lead us here, but where probably could this move get us to before we might have a reversal or a continuation. Now we have a weekly inversion fair value gap here. We traded above it. You can see how many time market tap on it. One, two. We tap on it almost two in a 2 weeks consecutively before we go higher. So we can also look at this area to be an effective area that price might has it might has influence on price. So now we are riding the market down to this point. So we are going to start looking for down bearishness or weakness in the dollar until we get to this point. So let's compare that with euro. Now we are on euro, we have a bearish order block here. You look at the difference now. On euro, we have a bearish order block here. So if we are going to continue looking for bullishness on euro until we get to the weekly bearish order block. So as and that will stand on price until we get here. So when we get here, we might now be more conscious and see what the market is trying to do, because that is the only bearish order block that is opposing us. Apart from this one, then there's no any other PDRA that is going to hold us on a weekly until we get here. But we have that, so let's have our eyes on that. Now, casting forward, I am anticipating for a bullish on euro and bearishness on the XY. Now, I am anticipating for euro and the XY to respect the weekly consequence encroachment of the week candle week. What I mean there is that I'm expecting euro and the XY. You can see there is a bull, like a long week on the weekly candle. So I'm expecting the week to be effective, the consequent encroachment, which is this particular little line I draw here, to be effective, right? And I am not anticipating for price or next week to week through it or to price below this area. So I want this area to remain on tap next week, and that should lead us to form a support and lead us to price and lead the price higher, the higher movement on price. Let's check the XY. So on the XY as well, we have this consequent encroachment of the week. So we are not looking for the week to pass through this, for the market to wick above this weekly consequent encroachment of the week. So we're going to keep an eye on this area, and we're going to use it to price lower up to this particular area. So that is a very, very, very important annotation. So in price. So my weekly draw on liquidity is previous week on the XY is a previous week low, then all the way to inefficiencies, which is this particular inefficiency. I mean, my draw on liquidity is this previous week low and this inefficiency in price. And on euro, my draw on liquidity is this previous week high and this bearish order block. So until we get to this area, I am looking for higher price on euro. Otherwise, we're going to start expecting whatever the market is willing to give us. So that is it for the weekly chart. So this is the daily chart, daily candle on on the XY. So this is the XY daily candle, and let's continue from where we stop. Now, the weekly profile is an obvious. Let's go to euro. Sorry, let's go to euro. Now, the weekly profile is an obvious Monday 12th of February 2024 candle as the high of the week that price into the weekly fair value gap or CB that lead the nice sell program on the weekly chart. Now, the low of the week is formed on Wednesday 14 February 2024, an up close candle that swept Tuesday low and rally higher. Now, what I mean is that we on the weekly we have a fair value gap, which is a CB. So the market opened on on the which is this week that just ended. Market open and price into that fair value gap. Then we start, which is an institutional order flow. Just like I stated last upper week, you can go to my last week video and watch it. I cannot re-edit it again. So go and watch it and see everything I said that upper week really happened this week. But well, I did not expect, or I was not expecting the market to start giving us, delivering higher. I was expecting us to, I was looking towards this area, and I was more interested in price getting to this point before we see higher prices. So, which is maybe that is where I was quite wrong, but not totally wrong. So we did deliver an institutional order flow entry drill, and we priced lower, which give us this fair value gap. So using the daily chart, we can clearly confirm that the bullish inversion fair value gap should be very significant to price, and I am anticipating for euro to retest on it. So this coming to retest on it this coming week, and to also act as a support for for markets to price higher, for euro to price higher. What I'm trying to say there is that this inversion fair value gap, which I annote like this, I am looking for it, or I am expecting it to act as a support for price. I don't want to see price go below that area. And also, if I'm to measure the Friday candle week, because we week lower and go higher, if I'm to measure that we have the consequent encroachment at the week at the inversion fair value gap high, so which is another thing to look out for. So I'm not expecting price to go below this area next week. So there is an added concept. Okay, sorry. Let's go to the XY. I don't know. I'm trying to be a bit fast. So, okay, we still have 30 minutes. I don't want time to, pass us by, because I wanted to explain everything. So, if I finished and I have any other thing, I can actually, add that to the video. So, uh, so we have this is the daily contract for the XY daily contract. So on the XY daily contract, we can see that we also have that inversion fair value gap, but it is widely open here compared to euro, and we can anticipate for price to go higher. Maybe taps on it before we see lower price delivery. But how effective, how far can we go? With the current price delivery, with the impulsiveness in price, we might not really see it go into the midpoint of the inversion fair value gap, because there is a liquidity here. Maybe after we sweep that liquidity, we might retrace before continuation. That means on intraday price, right? We might see a retracement, then a pullback, right? A retracement, a continuation in price. So that is it for Euro DXY. And also on the XY, we can see how price use this in volume. See, we trade into it, rally higher, rally back. Now, after we pass through it, we use it as a support. Now, this is actually well, this is a time where the market actually gives like gives the retail concept an opportunity, because if you see this as a support, here there's a support here that turn resistance. Now is a resistance here that turns support here. So that's a perfect move, right? Uh, it's all very fantastic with the price delivery. Like I'm enjoying it though. It's very very meaningful. So going forward, we can also expect this low and this high. So when we get here, we're going to until we get here, we are looking for lower prices. And if we get through it, we are going to use this again to sell more. Then if we are going to use that, we are going to target here, right? So that is it. And let's go to the 4 hour. See, right? So like this is what I'm saying, that this point in price, or this low equal low, relative equal low in price on the 4 hourly candle, shows that there is a significant willingness in price to go lower. So and also we have a 4 hourly fair value gap here. And with the price delivery, I'm not anticipating for us to go here on Monday. Or Monday might open and we start seeing massive massive lower price delivery in price. So we might also add that on Monday might not have the like on Euro, on the SY we might not see price go higher that much. Then we're just going to see sharp move lower. So that is something you have to put on your notice as well. Then let's go to the XY 4 hourly contract. So also on the SY, we see high willingness in price. This week already cleared the liquidity and already taps. We clear this sell side liquidity and we already tap on this volume imbalance, which is a significant reason why we should not even expect the market to want to come lower. It should just continue going higher. All right. But if you know your power of three very well, you will know how to engage with this market on the or the lower time frame. So I will end this video at this current time frame. I will not go lower than this. So our draw on liquidity now is this high, this high. Then if we actually moving aggressively, we can look forward to this high, right? So that is it. And after that high, get us to that weekly bearish order block, which is lying here. So when we get to that place, we're going to see how market is reacting to it. Right? If we react to it bearishly, then we're going to respect that area. If it's showing us a sign that it's going to respect that area, we're going to work with that as well. So it's 17 minutes already, and I really wanted to add the context to what we are explaining, but nothing much. Well, I'm thinking of giving us weekly price action on BTC, right? Because I trade BTC, but I don't just and I share my thought on BTC because I'm focusing more on forex, right? Because forex give me opportunity to trade with prop firm, and me trading with prop firm because I'm in Nigeria, or maybe you are in Nigeria too, and you know that there is no opportunity for us to get access to money, right? So this thing afford me to trade with prop firm, like quality prop firm. So I'm actually working with one prop firm right now. So I'm trying to build a portfolio. So when I have much portfolio, right? Let's say something, right? All you need to do is to know how to trade. If you know how to trade, go work with a prop firm that you know is good. Buy an account. Don't give yourself or unrealistic expectation. Trade it. When you pass it, then begin to just be making money with it. Withdraw your money, put it into your real account. So withdraw money, put it in your real account. Then imagine you are able to build $100,000 portfolio for yourself in 2 years time. Bro, I don't know what your age. With my age, I don't have myopic expectation. With my age, I know in 2 years time, if I can have 100K in my account, after eating, after feeding myself and all that, if I can have up to that in my account, at least I can afford to be making like 5% to 10% of it every month. Then I start there too, and I start building. If I want to still work with more profit, that is on me. So if you are looking for ways to make money from this market, and without the access without access to money, I think that is very important. But the first thing you need to do is to know how to trade. If you know how to trade, the rest is finished. So that has bring us to the end of